Hi guys, welcome back to the channel. Today's video we're going to be going over a look at how the collapse of crypto miners and how allying crypto miners could impact digital assets. Before the video starts, please like and subscribe to the channel as we're trying to hit 1,000 subscribers, and if you like the video it will help with the YouTube algorithm. So as it says on the title here, we look at what's going on for crypto miners and how it could affect the price of crypto prices. As prices drop, energy costs soar, and the Ethereum move to proof of stake, crypto miners face greater obstacles to generating profit. In the article, we look at the drivers of the crypto mining activity and how it could affect the price of major cryptocurrencies. What's the cause of problems faced by crypto miners? So if you've been mining crypto for, a couple of years, or even in the few months that you've discovered Ethereum moving to proof of stake, here are some of the main problems that are faced by us miners. Higher energy costs. Mining Bitcoin is notoriously energy intensive, not to mention environmentally unfriendly. As the price of oil, gas, coal have surged in response to high global demand, strict policy from oil producing countries, the transition away from fossil fuels, and the war in Ukraine, the cost to power Bitcoin mines has skyrocketed. According to data organized by Visual Capitalists, the average cost to mine a single Bitcoin globally was more than $35,000 per coin as of August 2022. As can be seen in the chart below, the cost differs greatly in jurisdiction. Energy abundance in the countries in the Middle East have some of the lowest costs to mine, while developing nations have typically the highest costs. Setting up a mine in a low-cost jurisdiction isn't simple, however. Establishing a mine can be inhibited by local regulation, as well as shortage of technology and resources needed to establish the servers to begin mining. As costs have increased, especially in our countries bitten by higher energy costs, Bitcoin miners have to run into these issues with cash flow and liquidity, driving many to collapse. So here is just a chart of the world cost for mining one Bitcoin. We have been over this chart in multiple videos, so I won't stick on it. The next problem that we face is Ethereum moves to proof of stake. This is what we've been talking about for a while now. As detailed here, in the past, Ethereum is nearing its so-called merge, which is going to be in around 12 days, I believe, which could see its network move from proof of work to proof of stake. This shift will see the network validated by validators selected on the basis of their quantity of holdings of Ethereum and not by miners, who would validate the network based on the time taken to secure and verify the network. The transition removes a significant incentive to mine Ethereum in particular, but has a knock-on effect on the broader crypto space as it reduces the marginal benefit for miners, who often mine multiple coins to operate. With Ethereum moving to proof of stake, we're going to see that hash rate hit all the other networks, and that is basically going to change up GPU mining forever. In layman terms, we're going to see a massive hash rate, all these other coins that can be mined, and we're basically going to see the profitability plummet. So this Ethereum move to proof of stake is going to be pretty detrimental for us GPU miners. Lower prices reduce incentive to mine. Of course, higher costs and fewer rewards to mine would be offset if prices were high enough to incentivize mining. However, as costs have increased, the price of cryptocurrencies have fallen even quicker. In the case of Bitcoin, prices have fallen by nearly 75% from peak to trough, with another weekend of sell-off from the crypto pushing nearer to those lows. Taking that average of energy cost mined per Bitcoin of around $35,000, the current price in the low $20,000 or lower means it's deeply unprofitable to mine Bitcoin currently. If expectations become embedded that prices will fall further, that will further decentivize the running of any mine. So those are the three main points that are coming together to basically collapse crypto mining for us and collapse the prices of Bitcoin and other cryptos. It's kind of like a perfect storm of the energy prices soaring up whilst the prices of the coins go down. Basically just creates this really unprofitable environment that us GPU miners have had to suffer through for the past, 3 months, something like that. The war on Ukraine obviously didn't help that at all, because a lot of the energy was coming from Ukraine, in Europe at least, but we'll get into that later on in the video and see some charts on that. So how could this impact crypto prices? Compared to some of the drivers we outlined here last week, the collapse in crypto miners will have a small effect on prices in the short term. However, the longer impact of the value of crypto assets will come down to supply and demand. Fewer miners will reduce the supply of new tokens onto the market, which therefore ease downward pressure on prices. When it comes to the health of miners themselves and some of the coins and brokerages that rely on mining activity, it's likely that the stress in the industry will not ease until some combination of higher prices and lower energy costs return. This will likely rely on weaker global economy activity, much lower inflation and interest rates, and a solution to the supply side constraints. Lastly, it just goes over a look at Bitcoin's technicals, what prices they're at this current time. The recent run-up in the price of Bitcoin looks to be merely counter-trend as price moves lower and resets major support around the previous bull market cycle high of $19,500. A sustained break below that level could open a much deeper drop, with the next level of support being around $12,000 to $14,000 zone. On the upside, major technical resistance looks to be around $28,000. So there is possibility to go below $20,000 and stay there for a while. This will probably knock off a lot of Bitcoin miners in Texas and in basically anywhere in the US. The only ones that would be profitable after that are people that are doing it illegally, or people in countries that have really low costs of energy like Kuwait or Saudi Arabia. But then again, the infrastructure for mining isn't really there, but it is possible to mine over there. Now I want to move on to the prices of graphics cards, which actually is one of the other main factors for this crypto mining prices and the price of crypto going down. So the price of crypto going down and the move to proof of stake basically created this perfect storm for GPU prices to actually go down as well. This is good obviously for gamers that want to get a hold of the top end GPUs that have basically been off the market for the past, year and a half. As we can see here, this GeForce RTX 3080 and a GeForce RTX 3090, there's a steady decline in around March, April time of the price of the 3080 was around $2,000 and now it sits at around $1,300, $1,200. So it's dropped a good $800 in the past 4 months. Same with the 3090, it hasn't dropped as dramatically just because they are the newest cards, but we can still see that downwards trend that they had in the 3090 and the 3080 Ti. If we look up at the 3070, we can also see the same, just because, all these prices are following the trend. It's a perfect storm of the crypto prices dropping, which means people want to sell their GPUs because they're not profitable. Also, they want to sell their GPUs on the run-up to the proof of stake merge, and it's actually allowed gamers to get a hold of these cards at MSRP. I personally actually sold some graphics cards back around 2 months ago, and I didn't make any profit from them necessarily, I just made my money back, but I was also mining for around 4 months on them, so we still made profits in that regard. Lastly, I just want to look at this energy chart for the energy prices in the last 5 years in the EU. Obviously, this is not for the US. As you can see here, the price of energy has actually skyrocketed since around 2021 to 2022 through the Ukrainian war, stuff like this. And obviously people in America are complaining about their prices of gas or their prices of electricity, but actually in reality in Europe it's actually way higher than that of the US. I think it's something like 50% higher in the EU than it is in the US. And I've seen on Reddit where people were saying that it's extortionate gas prices right now, but imagine if it was like double the price that they're paying in the US. They wouldn't be having it. But in the EU we have to pay it just because of the war in Ukraine, where we mostly got our gas and electricity from. So that's it for the video, guys. If you did enjoy, please like and subscribe to the channel. I'll leave links to all the articles in the description below, and don't forget to join the Discord for weekly crypto updates in mining and investing.